Good morning, everybody. I want to take the time to welcome everybody to our webinar on preparing to pivot post-COVID-19 presented by Synovus Bank. My name is Alex Warner. I am the existing industry project manager for the Forsyth County Chamber of Commerce. We do have quite a few people that are actively trying to log on at the moment. So we're going to give everyone just a couple more minutes to get into the system, just in case we're having some technical difficulties this morning. But while we do, again, this is being presented by Synovus Bank. So I wanted to put a little video and then introduce Matt McClure with Synovus Bank to tell us about the program that we have going on today for you guys.
Here is where we're from. Here made us who we are. Here is where we learn relationships are worth more than dollars can measure. It's a value that grows over time, strengthens under pressure, and thrives when serving others. We're Synovus, and we're here for our community because we live here too. Synovus, the bank of here.
All right, and I would like to unmute Matt McClure with Synovus Bank.
Well, good morning, everyone. Thank you for joining us for this presentation this morning. As you saw in the video that Alex was able to share with everybody, Synovus, we do consider ourselves the bank here. We're very focused on working with the communities and the small businesses and medium-sized businesses in those communities. With a strong focus in Georgia. Our bank was actually founded in Columbus, Georgia back in 1888, so we have a long history of working with banks and communities in Georgia. I just wanted to give a couple quick highlights on the bank. We're going to be talking about the Paycheck Protection Program toward the end of this presentation, but as some quick highlights for Synovus, since the program rolled out in the early part of April, Synovus has provided over $3 billion in Paycheck Protection Program funding across our footprint. But what I'd like to really highlight is that in North Georgia, what we consider North Georgia, which Forsyth County and North Fulton are part of that, Synovus provided 1,135 Paycheck Protection Program loans totaling $360 million, putting a lot of money into small and medium-sized businesses to continue to support them and most importantly, to continue to support their ability to maintain their employees and keep their payroll in line. We as best we can tell, Synovus was able to support somewhere in the ballpark of 350,000 individuals through being able to maintain jobs at their place of employment. The program we've got today is really kind of what comes after Paycheck Protection Program. A lot of businesses receive PPP funding. Some businesses have worked with their banks to receive deferrals on their payments of their loans. So in some of us talking, we felt it was really an appropriate time to have a discussion about what comes next, what happens when the Paycheck Protection funds are paid back or forgiven, and then what happens when your deferral comes back offline and all of a sudden you start having to make payments. So this program is really designed to give you all some thought starters on where do you go, how do you engage with your bank, how do you engage with discussions around potentially working capital support needs, what are banks looking at when they're working with small businesses, and how do you determine the best course of action for your company for the remainder of this year and moving into next year so that you can make sure that you have all the information necessary to continue to be successful, to grow your business as local, state, and really national economies come back online. There's more of an opportunity for true normalized business to business and business to consumer engagement. We just want to make sure that we've put some information out there in front of all of you that allows you to go back and think about what are the next steps that I need to prepare for in getting my business back online for the remainder of this year and moving into next year.
Thank you, Matt. And I want to turn it over to Donna Wade with Renaissance Bank for an introduction.
Okay. I apologize. I didn't realize we were doing this part. But,
no, you're fine.
I'm Donna Wade. I'm with Renaissance Bank. I serve as a regional senior credit officer with Renaissance Bank. And Matt and I have talked as well, and customers do have questions of where do we go, what do we do, and so we feel like this program will help with that. The biggest thing I hope you get out of this program is don't be afraid to talk to your banker. We're all in this together, and so hopefully today will help you in knowing how to plan when you do go talk to your banker. Renaissance Bank as well was very active in the PPP program. We're continuing to fund PPPs even today as people are learning more about the forgiveness part and deciding that maybe they need this as this COVID is going longer than expected.
Thank you, Donna. And last but not least, Patrick Fulbright with the University of Georgia Small Business Development Center.
Hey, thanks, Alex, for inviting me back again. And just wanted to let everybody know the Small Business Development Center, and we're out of Gainesville, but we have 17 other offices across the state of Georgia. And we're here to help small businesses, really three pillars of what we do. The first one and what we're known for is our no-cost consulting. So whatever your business is facing, whatever obstacle, please check us out. We could probably help with that. If it's not in my office, again, we have 17 offices. We can pull on some other consultants across the state to help with it. Our second one is the courses we teach. We are a continued education. This year, through the CARES Act, we've got some funding, so our courses for the rest of the year are at no cost also. And then our third really pillar is our research that we do for businesses, from demographics to industry to competitive analysis. We can help you make an informed decision. For the last 3 months, we've been really disseminating information from SBA and working with our bank partners to get the best information out to you regarding the PPP, also the economic injury disaster loan, advance and loan information. If we don't hit everything that you have questions on, of course, check with your bank, but we're also here to help with you to understand that information, especially since we have the Flexible Act that has been brought on this past week, and that has added another layer of complexity and information that's trying to be deciphered to help make informed decisions and how to use this PPP dollars going forward. So we hope today that as it come up, we'll put some minds to ease and also answer some of those burning questions, what now, and also pivoting back to after COVID. What should I need to be doing as a business to pull out of this COVID? And again, if we don't answer those questions, please circle back with us. We're here to help. You can get us. We'll have our. You can get in touch with us through some of the information we'll have at the end on our website or our email address or phone number. But I wanted to thank Alex for inviting us back. Appreciate it.
Of course, and thank you, Patrick, Donna, and Matt. So without further ado, we do have some pre-submitted questions for our panelists. But if you do have a question that is burning or is going to be a tangent off of an answer that a panelist has already given, if we could keep the room kind of quiet, it will keep your mics and videos muted, but there is a chat option in the top right if you would like to implement a question there. All right. And so without further ado, I'm going to ask our first question. This is going to be for Matt and Donna, just because it is a banker-related question. Everyone had a really tough time back in 2008, 2009, to where bankers were made out to be more of the bad guys. So how is 2020 different than 2008, 2009?
I'll take a quick shot at that, and then Donna can obviously she was very involved back then as well. So I think just as a quick answer, the situation between the Great Recession back in 2008, 9, and 10 is very different than now because of the status and the state of the banking industry. Back in 2008, 2007, there was grave concerns around liquidity in the banking industry. The banking industry itself was over leveraged. There was not enough liquidity out there to support a lot of the debt that had been built up in various sectors of the banking industry. That has all been significantly overhauled through primarily legislation, but also most of the banks themselves took a good look back then at what took place and have repositioned themselves to be extremely liquid at this point in time. So the current environment we're dealing with is an issue with the broader economy brought on by COVID, in which the economy was basically forced to close down, and you have small businesses and medium-sized businesses that just weren't able to sell products. The banking industry at this point in time is mainly through the Paycheck Protection Program. They're also getting ready to roll out the Main Street Lending Program, which is a Federal Reserve-based funding program that will be managed through the banking industry, because of the fact that the banks are on the forefront of the ability to support small businesses and help roll out these funding mechanisms in a way that allows businesses to stay on line without having to have grave concerns about cash flow, at least in the near term.
And I would agree with that with Matt. This is a much different situation. The 2008 crash was due to many reasons: banks being undercapitalized, aggressive lending in the mortgage area, overdevelopment of residential properties, and then, in my opinion, an overreaction of the bank regulators, which caused a triggering effect down to everybody else. In this case, while land prices are still very high, we don't have those other causes. The economic downturn is not caused by things that were done by individuals. It's caused by this pandemic. So, and regulators today are promoting banks to work with their customers to help everybody get through this situation. So it's a much different situation than 2008.
That is great. Thank you, Donna. Oh, hold on, Matt. Sorry, I had your microphone was being picked up by Donna. Go ahead.
I was about to say, Donna made a great point, which is, everybody I think on the call understands that the banking industry is heavily regulated. Back in 2008 and 2009, the regulators stepped in very quickly and in many cases forced the banks to halt or freeze lines of credit, especially to large and medium-sized corporations. That was not something the banks took lightly, but we were in a regulated environment. This is very different because at this point in time, the government has come to the banks and said, we need you guys on the front line helping support small businesses by allowing us to push PP and push the Main Street Lending Program out through the banking system. And because the banks are so well capitalized and so well positioned at this point in time, there is no underlying or inherent risk in the banking industry itself. And really at this point in time, a lot of the banks are helping kind of lead the way out of this by allowing their clients to receive access to government-supported funding.
Thank you for Donna and Matt. This one will kind of go along the same lines that we were just on, especially since Donna had mentioned that Renaissance is still accepting PPP applications out there. It's a question that says that my business is fine now, but I know I was affected by COVID. What should I do to be prepared? Whoever would like to take it first.
I'll take that one, Matt. And I think it really depends on how your business was affected. Is it a short-term effect, or is it long-term, requiring you to change the way that you do business? And quite honestly, some of you may not know that today. I believe there's going to be a second round of COVID coming. Don't wish it, but believe it. I would recommend you start by reviewing your business plan. If you have not updated your business plan, now is a good time to do so. Look at your budget and look at your past projections, and based on how you feel that COVID is affecting your business, redo those projections and look at what your working capital needs and your cash needs will be. Then come talk to your banker. The good news is, after the last recession, I know I have many customers that will tell you that after our last recession, they are much leaner and cleaner in the way they do business. There may not be as many opportunities for efficiencies in the way they do business today because they're already operating so much better than they were. But look at your cash flow needs, look at your projections, and then come talk to your banker. Don't wait till you're out of cash and you need help. come now and let us help plan with you so that we can provide funding or opportunities for you and make recommendations so that we can all get through this.
Hey, Alex, I can jump in here too. What we're recommending, yeah, Donna, you nailed a lot of it. One of it is at the end of the day, we're recommending you protect your cash in this whole current condition. That means really a top to bottom review of your whole business and every element of your business, from your receivables to payables, even with your employees. You know, there's concern with employees bringing them back too early. The business isn't still there. You know, even with PPP, that was the whole purpose of it. But going forward, there could be strategies that you need to implement that you might have to put employees on partial unemployment. I would also definitely work with your banks, but look at your supply chain. Talk to your vendors, suppliers. Can you push out some terms? At the end of the day, and you know, it's somewhat cliche, but we always use it, cash is king, and it's never been more important than right now. And trying to protect that cash, even though we've got these levers that we've been able to pull for idle, PPP, and now if you qualify the Main Street lending, there are some alternative financings. But again, I would use your banks as your best friend right now and look at, have you ever tapped into a line of credit or things that you could qualify for? If you have rents or leases, talk to those landlords. Can you still push them out a little bit? And again, the theme is just protect that cash and look at your cash consumption, your cash cycle. And if you have struggles with that, you want to do some analysis, we're here to help you at the SBDC. We can help you do those analysis. But again, I think, Donna, you nailed it.
Matt, do you have any thoughts on this one?
Yeah, I think to go a little bit in line with what Patrick was saying, one of the things that we're talking to a lot of our clients about is the supply chain that you work within based on your industry, especially if you have inventory or specific supply needs. We've had a lot of conversations with our clients around potential disruptions down chain from them, depending on what they may be ordering, understanding their supply chain. We have a lot of clients that have ordered from the same vendors for years and years and years. They've never really sat back and kind of played the what if game. What if one of my vendors all of a sudden is cash strapped on their end, or they can't get their supplies? So one of the things that we're finding critical with a lot of businesses is to talk about alternative sources, not just of financing or capital, but alternative sources of product or supplies, just to be doing a little bit of research, because in many cases, you may have a business that's downstream from you that you don't realize is experiencing challenges until all of a sudden you can't get supplies, you can't get materials, you can't get information from them. So you want to start doing a little bit of work to figure out where your backups are. We're also seeing it with some small IT companies. We have some small IT companies that have gotten into trouble recently and maybe having some cash flow issues. We've talked to our larger clients to say, what if you work with an IT company that does begin to have operational challenges because of what's been taking place in the economy? Do you have the ability, or have you done any research to find alternative support mechanisms, alternative support channels, so that you don't find yourself one day unable to operate because you don't have somebody that's downstream from you that's still in business?
Okay, perfect. Let's dive a little bit deeper into some cash flow issues. If you do foresee that you will be having some cash flow issues with your business, what could your bank do for you, or what would you recommend you speak to your banker about?
I'll start with that one. I mean, I think Donna said it early on, which is the most important thing is reaching out to your banker. We can't express enough the importance of good communication early on. Bankers are much more fond of learning about potential challenges very early on in the process, because then we can have a good dialogue around, what are you doing? How are you preparing to get your business back on track? One of the questions that we asked a lot at Synovus recently is percentage rate questions. What percentage is your business operating at now versus where it was 90 days ago? What percentage of your revenues what percentage of your revenues are you earning now versus 90 days ago? And then we start asking questions like, can you project out and say what percentages of your revenues will you be earning 90 days from now or 6 months from now compared to 90 days ago or a year ago? We want to be having those conversations to get small business owners to think about what took place over the last 3 to 4 months, how that is maybe going to have a protracted impact as best as they can project for the remainder of this year. And then it'll give them hopefully a feeling of, are they going to have sufficient cash flow or cash reserves or working capital access to support them? One of the concerns that is out there is a lot of businesses that have SBA loans. SBA loans are put on an automated deferral program through the SBA. It's not something that people ask for. The SBA just did it. So you may have SBA loans that you've had your payment deferred. Those, I believe, are going to be deferred through September. And then you have other loans through your banks that may have had deferrals. Well, what happens when all of those payment deferrals roll off and all of a sudden you have to start making those payments? Have you thought through what comes when your cash flow does get impacted in the next couple of months by having to start making loan payments again? How are you going to support those? Do you feel there's going to be a risk to cash flow capabilities? One of the things I hate to say it is we're talking to business owners. Once PPP has run its course, what are your needs for your employees? A lot of companies maintain employees per part of the requirements for PPP, but are those employees going to be necessary? Have you projected out the impact of maintaining those employees once PPP is gone? And the key thing is when you sit down with your banker, or even if it's a financial advisor before you get to your banker, being able to put all your cards on the table and say, here's where I foresee my biggest risks and challenges, and start the process of just projecting out where you potentially see your biggest expense concerns, your biggest risks, because that's what the banks are going to want to understand from you. Is it'll also helps us determine, is your financing needs short term, 90 days, 4 months, or is it longer term, 6 months plus? Because that allows us to determine what kind of financing mechanisms may be most suited for your business.
And I agree with Matt on that. Again, talking to your banker is key. Planning and coming in with doing some preparation first so that you can forecast. Your business much better than the bankers do. Banks are, number one, if you haven't taken advantage of the PPP, you were afraid to do it at the beginning because there were so many questions out there, and now you wish you have until June 30th to do that. So make sure that if you feel like it would be beneficial for you now, that you go ahead and reach out to your banker. If your bank isn't doing PPPs anymore, other banks are. As I mentioned, Renaissance is, Madison Nova still issuing PPPs.
At this point in time, we are not. We've got our kind of at this point in time. We've unfortunately switched speeds to Main Street lending at this stage.
Okay. Matt mentioned Main Street lending, which is another opportunity, and we have customers that are asking for another 90 days of deferment on their loan payments. I will tell you, as a bank, we're looking at that closely to see if that's really the best solution for you. We don't want to just extend a problem and have a bigger problem down the line. We'd rather go ahead and address it today. But if it is short term and that would help, then banks are considering deferment for an additional 90 days. So there are many opportunities. It depends on your situation, the strength of your balance sheet and your financial statement of the business. As Patrick said, cash is king. So as you're in these deferment periods or the PPP periods, cash is king. Hold on to cash as much as you can to help you get through this period.
That is great. Thank you, Donna. Patrick, I'm going to direct this next question to you. Because the bankers, Donna and Matt here, they've been talking a lot about projections and what to be prepared for with your bank. If your bank is asking you about projections and business plans, where would a business even start?
So we have a lot of tools through the SBDC. As I mentioned earlier, our one-on-one consulting can help with that. We also have some online tools that if you need some resources, we can send those to you to help you update your business plan. business plans today are not the 32-page ones they used to be. I actually like to characterize them as a business strategy plan, especially if you've been in business for a while, 8 to 10 pages, but things that you really need to look at as I'm pivoting my business and I'm getting back to business. Probably during this COVID time, you've already moved on to maybe a different type of revenue stream. Giving an example, some of our restaurants have done takeout or they've done curbside service, things that they weren't really doing before, they've actually embraced, and now they've created a new revenue stream. So we're calling that the new business norm, and a lot of businesses are doing that. I would incorporate your employees in this. A lot of your frontline employees that are in your business probably have some ideas or suggestions that this would be a great time for a team building of brainstorming. Hey, we're coming back. We don't have the foot traffic, or because of COVID and our social distancing or physical distancing, we're not going to have the seat utilization, or we're not going to have the foot traffic through my retail store. How do we change merchandising? How do we do the table setup? What's our turn on those tables, or how do we modify our hours? Do we go to extended hours to still get some other foot traffic into a retail store or through a restaurant? So those are some of the things that we can help work through, and also help you to develop a business strategy going forward. It'll look much different than what you did in the past. And I would continue to keep those business plans or business strategy plans dynamic, meaning review it even after 30 days, 60 days, 6 months, every year. I've got a great client that he spends 2 weeks of every Christmas period of time working on his business plan. And at the end of that Christmas period, when he comes back to work and his factory comes back to work, the first thing he does is share that plan with his employees. One, he wants that open dialogue, but then he has all those employees that are all focused on where the company's going, and he has a uptick of surgents that, hey, this is what we're striving for this year. And he does that business plan based on economic changes, dynamics with competitors, industry changes. So he tries to keep it a live document and relevant to his business and business industry. So again, the SBDC, we can help with those and set up an appointment, or if you need some tools, we can send it through online. We have a great business plan that's online that we can share with you to help as a reviewer walk through and make some changes or suggestions. But also incorporating the banks in this process too. They see so many businesses, and they've got so many great ideas that are companies that are pivoting right now, that they could share those with you also. I'll give you another example. I've got a wine client that they really got impacted. Their tasting rooms were just shut down. Well, they created wine slushies. And so they were able, and they sell out pretty much every weekend with their wine slushies. So again, they weren't able to bring people in the tasting room, but they could deliver them to their cars and they'd drive by. Now, they wouldn't want you to be drinking and driving, so they would comment on that. But a lot of times they let them sit and park out near their vineyards and have their wine slushy and then let them go on their way. But that was something that they pivoted, and they're doing very well. And now this has been incorporated in their ongoing strategy for their business offerings going forward.
Matt and Donna, would you like to jump in about projections and business plans?
Yeah, I mean, I think even before COVID or any of the issues we're dealing with right now, we have, Synovus has had a long time relationship with the SBDC throughout the state of Georgia, quite honestly, and we've had a lot of clients that we've referred to them. Bankers have to be very careful when someone comes to us and says, I'd like some help with our projections. Bankers aren't really well positioned to sit down and help you with projections that you're going to turn around and give back to the banker for a loan. So a lot of times we will refer you to the SBDC. You may have an accountant that you work very closely with, or a wealth finance person that can help you as well. But the SBDC is also great because they've helped a lot of our clients put together a business plan that is well formatted, well thought out. A lot of times business owners are great at seeing big picture. Big picture sometimes is challenging for a bank to help us get our arms around the financing request. The SBD, through some of the guidance and some of the tools they can provide, allows a business owner to take that big picture and put it into a very well-designed format on paper that has numbers that the banks can get their arms around and understand why you're requesting financing, what's the need for the financing, is it working capital driven, is it inventory driven, is it personnel driven, and one more thing I'd say is Patrick mentioned kind of what's going on with a lot of businesses that are having to pivot into their industry a little bit. We see a lot of companies that as they've stepped back, they've realized that components of their business that they may not have realized were very risky over the last several years have come to light just in the last 3 months. So we have clients that are saying, I have components of my business that I'm going to start to shed. We're not going to refocus back on those, but I have new avenues that I want to start exploring. That's wonderful. And Donna can probably give you some good thoughts on this as well. But when you come to the bank and say, my company used to look like this, and here's the data for it for the last couple of years. However, I'm modifying my lines of business. I have new revenue sources I think will be of value to the bank. What the bank's going to understand is, how did you make that decision to go from where you were to where you're headed? And what are those numbers going to look like? Can you provide us projections that say, over the next 6, 12, 18, 24 months, if I pivot my business into a new line or new opportunities, what's the revenue and expense impacts that I foresee taking place? Because that's really how we align our financing for a business.
Thank you, Matt. Donna, do you have anything that you would like to add?
I think Matt and Patrick have covered it well, and I would say take advantage of the services that Patrick and his group are offering. As I said earlier, where this has been tough and it's a negative, use it as a positive. Take time to revisit your business plan or business strategy. As I said earlier, people came out of the last recession meaner and leaner and much more successful in their business. Take advantage of this today. Make it a time where you reevaluate what you're doing. You look at your profitable businesses. You look at those that aren't as profitable, but you've just been doing for a long time, and so you continue. And make those adjustments as needed, and use this as an opportunity to review your business strategy and make adjustments as needed.
Perfect. Thank you, Donna. So I'm going to make a disclaimer right here. We are about to move into our PPP related questions. Today is June 18th, 2020. These questions and answers are only as good as June 18th, 2020. As many of you have seen throughout the process, this is a never-ending changing. Guidance is changing. Even the applications are changing. So any questions and answers that are given today are only as good as they are today. So just keep that in mind and don't hold it against us if everything changes again tomorrow. So we've already answered to one of them, but I want to extend it over to Patrick just for quickly. PPP is still available until June 30th. Correct, Patrick?
Yeah, I would, I know Donna had mentioned the 30th date. I would do it now. If your bank, your SBA preferred lender bank that has not had that back open, or they've closed the opportunity, Donna said Renaissance still open. There's fintech companies, financial technology companies that are still doing PPP, like PayPal and Intuit. Those are some options, but do it now. Don't wait till the 30th, because actually the 30th is the day that is required to give them a application number through the bank. That's the deadline. So that's not really a deadline for you to apply. You need to be applying right now before that June 30th, because that is the drop dead date for getting an SBA number back to the bank for your loan. So if you haven't done it, I encourage you to do it. Also, let me throw this in right now. The economic injury disaster, the EIDL portal is opened up again for everyone, not just agricultural. So if you haven't done that, you are allowed to do both. There are requirements and segregation between what is allowed on EIDL for the loan and then what is allowed through PPP and also the forgiveness process. The EIDL has a loan part to it, or excuse me, a advance part that is already forgiven. So when you go through the portal, you can check a box and say you want to be considered for the EIDL advance, which is based on each employee up to $10,000. But that funds, if it's used for what its purpose for, that advance is already forgiven. Now, the EIDL loan does not have a forgiveness element, unlike the PPP FA now with their requirement or their forgiveness program. And some of those rules have changed. And I can tell you a few things really quick. That 8 weeks forgiveness period has now moved to 24 weeks. That is fantastic, meaning that if you were going to struggle with trying to get all those dollars forgiven in 8 weeks, now you have 24 weeks. The loan period has moved from 2 to 5, but that was for loans after June 5th. However, and this is Matt and Donna, I want to talk to this, they are permitting lenders and borrowers to mutually agree to extend their PPP loans prior to those loans for June 5th. But that's going to be with your bank. So you need to have communication. And if you picked up anything, the communication with your bank is critical here. They're the ones that are on the front line here. And one of the other incredible things, they've extended the deferral period from 6 months to 10 months. So if you do the math, depending on when you got the loan, you have a 24-week period to account for it for forgiveness, but then you have additional 10 months that's bolted onto the back of that before you have to make a payment. Now, that does not include interest. Interest does accrue, but your effective deferral period for your repayment is pushed out if you don't get a whole 100% forgiveness. If you have a residual that's left over, it turns into a regular loan, but that loan payment's not due for additional 10 months now. And then probably one of the neatest things too is the payroll requirement was reduced from 75% to 60%. And the reason behind that was to allow for non-payroll expense, because if you had a company that had smaller employee count, you will probably have other non-payroll approved type of expenses that could qualify that's greater than what your payroll would have been. So they lowered that from 75 to 60%, which I think was an excellent move by our legislation.
Thank you, Patrick. Donna and Matt, I don't know if you even want to step in the waters, but if you want to say anything, you are welcome to. All right. For this next one, I'm going to kind of put it out there, but like we said, these answers may not be available today, and so a completely acceptable answer from our bankers is, I don't know yet, or let's wait a couple more weeks. And that question is, when can I start to apply for forgiveness?
I'll answer that for Renaissance Bank. We have put off the process until June 30th. It could be adjusted from there, and the reason we did that is because there does continue to be many, many changes. The PPP FA came out, which changes your forgiveness and what can be forgiven. And as well, they just came out with a new, shorter application 2 days ago. So things continue to change. And, as bankers, it's a very frustrating process and has been from the very beginning, because what we tell you one day can change the next. So we're always very careful when we speak about it, because it is an ever-changing process. So bear with us on that. It's not us making the rules.
Yeah, I would. Donna hit it perfectly, which is we get probably I know I personally probably get 5, 6, 7 calls or emails a day from clients asking to go ahead and start the process, because we have a lot of clients that have already moved through their 8-week period. They don't feel need for the 24, and we have to keep explaining to them that the playing field is ever changing. Our credit officer uses the term throughout this PPP process. It's like trying to build a sandcastle on the beach in a hurricane, because every time you get one thing figured out, it gets changed on you again. So constant communication with your bank is going to be critical. I also tell people that, all the information that is supplied to the banks is also available on the SBA's website. So the SBA has done a pretty good job about every time there is a modification to the program, they will typically within a couple of days update their frequently asked questions. And they'll also put out, they call it their final proposal, even though it's never final. They'll put out additional details that explain what has recently changed, such as when the addition of the Flexibility Act was added 2 weeks ago, and then 2 days ago with the new, what we're calling the short form application. So it's very hard for the banks. Synovus built our forgiveness portal and was going to open it up on the 15th. And at this point in time, we have not put a date out there of when it'll actually be open, because we're very concerned that if we do that, it's going to get changed again. We anticipate within the next 2 to 3 weeks. It's very hard to pinpoint that, and we just tell people that the SBA is aware that when they make these changes, it requires the banks to have to pull back and modify their application process. So we have some clients that are very concerned they're going to miss a window, they're going to get themselves in trouble, and all of a sudden their loan's not going to be forgiven. There's still plenty of time to work through the forgiveness process. The biggest thing you can do is wherever you got your PPP funds from is just continue to ask the bank. I know Synovus, as much as we can, we put updated information on our website that allows people to understand where we are, but we also continue to direct folks back to the SBA's website. There's very, what I call granular questions. And in some cases, we've advised folks, if they have real concerns, to talk to their CPA or talk to their attorney to get other views on this, because the banks are trying to decipher this information as best we can. But I'm always cautious to tell people you can go out on the web and read blogs and information from other supposed industry experts, and everyone has a slightly different view on this. So the best thing you can do is try and adhere as much as you can to the guidance that's put out on the SBA's website as far as what information is going to be required. If you haven't communicated with your bank, or your bank has not directed you to the actual application, the actual forgiveness application was posted a few weeks ago. It's been modified a little bit, but if you go to the SBA's website or communicate with your bank, they can point you to it, and at least you can get familiar with it and see the information that's going to be required of you when you go through the forgiveness process. It allows you to start pulling your documentation together.
Hey, Alex, just to add what Matt was saying, on that, the SBDCs we're trying to help disseminate information, and Matt nailed it. We get most of our information from SBA, and help internally. We use kind of a task team that's working on deciphering and understanding, and we work with several banks to help with understanding these rules. But they are moving. Even as last night, they call it, as Matt was saying, it's an interim final rule, IFRs. And even last night, we had 2 other ones just came down that are, they're trying to give you more texture to the rules so we can understand them. One of the ones that we had that came down last night was on owner's compensation. There was a lot of conversation about how much can an owner take out. Well, a new rule came down last night. It actually limits your owner's compensation you can claim to only 2.5 times, which was the original number on your average salary for the whole of 2019, a monthly average. And they're holding owners to that limit under the PPP, and that came through last night under a new IFR number 19. So every time they bring out another one, they add another number to it. So it's, as we mentioned, these things are moving and changing. We're trying to have these webinars periodically to help everybody with the information. And again, it's the best that we have, as Alex mentioned at the beginning, the best we know as of that date. But again, it's changing. Just to add to one other thing too, work with your banks, because if you have already entered your payroll forgiveness for that 8 weeks, you can still stay that. You don't have to use the cover or move to the 24 if you've already got the coverage under that 8 weeks for forgiveness. So, but again, work with your bank on that.
Perfect. Thank you, Patrick. So I'm probably not going to let Matt and Donna answer this question because it is fairly loaded. And so Patrick, if you can, by all means, if you have any residual funds or leftover funds from PPP that you know are not going to be forgiven, can you put that in a CD to earn interest on it?
Yeah, I would. I would put it in a segregated business account or move it into a interest-bearing account. If you're not going to use the whole thing up, and you can have some time on it, then I would. Not that, it depends on the CD or money market or whatever you're trying to put it in. There's rules about pulling it out early and things like that. Follow all the rules. But I've got several clients that have got both. They've got the idle and they've got PPP and they've got some forgiveness, but they know they're going to carry it over in a loan, but they're not going to exhaust all those funds immediately. So I would look at your cash demands, as we talked about earlier, what that looks like, and come up with a strategy that maybe I can move this into a short-term CD or a higher interest-bearing account for those funds. As you recall, the PPP is 1%, and now it's moved, if you elect, all the way to 5 years. The idle is at 3.75, and that can be up to 30 years. I'm encouraging, if you haven't looked at the idle or the PPP, don't wait, do it. The funds are running out. As Matt mentioned, Synovus is not taking any more PPP. I don't know how long the idle funds will still be out there. There is a time limit when they're going to close it down. But those are things that I would look at. As Donna mentioned, we don't know that we won't have another reinsurgence of COVID, or in what I'm describing, we have a trailing economy right now. So we see the impact right now, but we're still going to have effects of it going forward. So those funds could be parked for a while if you don't need them immediately to shore up your business going forward, especially if we have a reinsurgence of COVID. Businesses are not returning as we anticipate. If you can look at history, even after recession, we had an 18 to 24 month return to pre-recession periods. We're going to have that same thing with COVID. And if we have a second insurgent or another rise of having to shut down temporarily, I know that yesterday I was talking to some colleagues. There was a couple restaurants opened up in their area, and they were doing some testing, and two of the folks that came in tested positive for COVID. So they had to shut the restaurant down again because it affected, or they were concerned it had spread germs in there that everybody could be affected. So these are some of the things we're still challenged with. But again, as we go forward, we can help. Watch our website for these webinars. We're going to continue them throughout the state to help this information, and working with our bank partners on deciphering and trying to give you the best interpretation we can. It is a lot. It keeps on getting, I call it being layered on. And so it's tough sometimes to decipher, and there's always those outliers, or my business is a little different, I'm a little bit unique, and those are the ones that take quite a little longer to figure out, does this apply to you, or how do you navigate through these rules? But we're trying to do the best we can with it.
Thank you. And Donna and Matt, if you want to jump in on the extra PPP funds, you are welcome to. But I do have a follow-up question that is similar to where they are asking. They have taken the idle loan, but they've used the PPP for their immediate needs. So they have all of the money from the idle loan. Would you have any accounts that you would recommend for them to stash the idle loan into? And again, if you do not want to touch it, I understand.
Well, I mean, as long as I tell people all the time, there's a lot of questions about can I, should I, and I tell people all the time, I say, the rules are clear and published and available for both the EIDL loan as well as PPP. So I tell people, I say, just play within the bounds of what the SBA has rolled out, and you should be fine. This sounds maybe funny for a banker to say, but a lot of people are very worried about if they don't get the portion of their loans forgiven, what do they do? If you're going to get, banks don't roll out 1% loans very often. As a matter of fact, I've been in banking for 20 some years. I've never seen it before. So even if you end up with a portion of the loan that's not forgiven, or you reallocate some of the funds in a different way that requires you, well, it doesn't allow you to be forgiven. If you take those funds and you can, put them in a CD, may not be something I'd recommend, because I can tell you most of the banks, to get 1% or better in a CD, you're going to lock it up for a longer period of time. But you might be able to get a money market account that pays you something decent. But you want to put it in an account that, while earning interest, allows you to get the money out quickly without any kind of penalties. So a CD would not be something I would recommend.
And Donna,
And I agree. I was going to say, I agree with that, with Matt on that. Keep it liquid, so if you need it, which is why you got it, it's there for you. But we do have customers that have said, hey, I can get this money at 1%. Even if it's not forgiven, I can get this money at 1%. You can't get that at banks. The other tip I'd just like to throw out is I have a lot of customers that when I tell them to go to the SBA website, they say, I can't find it. Google SBA coronavirus, and that will take you directly to where you need to find the information on the SBA website.
Thank you, Donna. And that gets us through all of our pre-submitted questions and the one that we had in the chat. So we do have a couple of minutes left. If anyone has any specific questions they would ask our panel. You could please use the chat box there. And while we're waiting on some answers, I do want to take this time to thank Matt and Synovus once again for helping us put this presentation together. And then our amazing panel with Donna Wade with Renaissance Bank and Patrick Fulbright with the University of Georgia Small Business Development Center. And if you have any questions, or if you are looking for a banker, or you know of a small business that's needing some help or wanting to get some information on PPP, by all means, feel free to have them contact me. My email address will be in the chat here in just a second, and I will be more than happy to refer you out to Donna, to Matt, or even Patrick with the SBDC, depending on what your business is needing. We are only here to help, so please let us do it. And I don't see any questions come across in the chat, so I'm going to turn it back over to Patrick, Donna, and Matt. And hold on. And it was for Patrick from the SBDC. They're wanting to know how they can go about scheduling an appointment with you, Patrick. Hold on. Get you unmuted, Patrick.
Sorry about that, Alex. Yeah, I try to remember always to do it. They can call us at our phone number, 770-531-5681, or they can reach us out on email at Gainesville@Georgia, spelled Georgia all the way out, sbdc.org. So Gainesville@Georgia, sbdc.org. And for some of our classes, if you're not in this area, you can actually go to our website, www.georgiasbdc.org, and you can just go on training and see the different classes and the PPP, FA. We have different names of it for some of that dissemination as we get more and more information to help folks make informed decisions. But I would encourage you, just to reiterate a little bit earlier, just to make sure if you haven't applied, don't wait. Do it now, today. I would do both, EIDL and PPP. And one of the things that we're telling folks too is document. Put these funds in a separate account, a business account. Try not to commingle them. It needs to be something that you can account for through your QuickBooks, or however you have an accounting software, or even do an Excel spreadsheet, we can actually help you with that also to maintain that diligence on what you're spending on. And as Matt correctly said and then pushed on this, make sure you're following the guidelines. There could be penalties coming after this if you get audited and you misappropriated those funds. So follow the rules, and we can help with that too on if you have a question around that. And then at the very end, retain this information. Initially, it came out 6 years. We've seen some information from some CPAs suggesting keeping this information that what you use the funds for up to 11 years. So that seems extreme, but this is a unique period of time. So keep those records and document.
Perfect. Thank you, Patrick. And Joanne did ask a question in the chat, and it should be a fairly straightforward and why they extended it out to the 24 weeks. But it is saying that the Easy app is saying you can apply for forgiveness as long as you did not reduce salaries or number of employees. If you furloughed your employees but have already brought everyone back, are you good to go for the Easy forgiveness form?
Yeah, I can take that as far as what I understand. Yes, you can. It's just part of the extended rules now. But any of these things, I would always go back to your bank partner and have that conversation. Let them, you guys have an open dialogue about those rules.
Yeah, and what I would say is if you look at the original intent, the original purpose of PPP, it was to maintain employment for small businesses. So there's been a lot of questions about, what happens if I had employees at the beginning of the year and then I let them go as COVID started and I brought them back. The idea was to either maintain or bring back employment. So as far as we've been able to understand, and we've had some conversations with the SBA and with our attorneys, is if you had someone that was furloughed and you brought them back on payroll to maintain your payroll to what it was prior to the start of COVID and the funding of the PPP, which in the day, I don't remember the exact dates, but I think it was February was the time frame. As long as you brought people back and put them back on payroll so that your payroll was what it was prior to, then you're going to be fine, are eligible to use that as part of your forgiveness.
And let's see, looks like we have.
I was just going to support what Matt said. That's the way we understand it also, Matt.
Perfect. Thank you. And so with no other questions coming across the chat, I want to thank Donna. And Donna, if you want to say a couple words as we close out.
I think if you didn't hear anything else here, I hope you heard communicate with your banker. I hope you heard to take this as an opportunity and plan for your future. Look at how this has affected your business, make adjustments, make plans, and take advantage of Patrick and his company and his business to prepare and create a new business strategy based on the changes that have taken place.
Thank you, Donna. And last but not least, thank you again, Matt, for helping sponsor this event and allowing us to put it on. I'm going to give it to you to close out our presentation.
Thank you, Alex. And I want to thank Donna for being part of this. It's always great when you have different perspectives from folks that have been in the industry for a long time. It's also great to have Patrick as part of this because it allows us to, quite honestly, to defer some of the questions and some of the concerns that businesses to have off of us and over to Patrick, because as we're being asked for financing, we need to be careful as the banker about how much advice and direction we're giving on how do you prepare for that financing. So the SBDC does a phenomenal job in helping clients put together packages, business plans that they can actually go to their bank and have a conversation about financing or working capital needs. The last thing I will leave everybody with is Patrick made a comment earlier that if you have a business plan, fantastic. If you haven't touched it in a few years, now is the time to do it. If you don't have one, now is the time to start putting one together. We We also agree that they need to be very dynamic and fluid, and you should be looking at your business model and your business plan every couple of years. Hopefully it doesn't come to an event such as we've experienced the last 90 days to get you to start thinking about your business. This may be the time for a lot of folks on this call, a lot of business owners to step back and say, I need to start preparing more for the future and have a business plan that I can modify year to year as my business changes. So I want to thank everybody for being on the call, and thank you, Alex, and the Forsyth County Chamber for allowing us to sponsor this.
You are welcome. And thank you, everybody, for participating.
Thank you, Alex.
And, we will do our best to keep you informed as things come down the pipeline.
Awesome. Thank you all very much.
Thank you.